Hello traders, I'm back again with another video. So this is a strategy that includes multiple time frames. All right, so we're going to be analyzing from a higher time frame to the lowest time frame. Okay, so from the highest time frames we have weekly and daily time frames. All right, so these are higher time frames, and in these higher time frames we're going to be looking for key levels. So we're going to be looking for key levels and key levels only. All right, and then secondly we have a 4 hour and a 1 hour's time frame. All right, and in these time frames that's where we're going to be doing most of our analysis. Okay, so that's where we're going to look for market direction, we're going to look for supply and demand areas, we're going to identify liquidity zones, and also look for trading opportunities. All right, so let us move on. And then lastly we have 15 minutes and 5 minutes time frame. Okay, so these time frames are very important. These are entry time frames. This is where we're going to be looking for confirmations and entry, right? So we're going to be identifying whether we should buy the market or sell the market. Okay, so now let us look on a real chart. Okay, this is gold on a weekly time frame. Okay, so this is gold on a weekly time frame, and remember, weekly time frame is a high time frame, and we want to look for key levels. And from here we can spot one of the key levels at the top, so we can identify that as one of our key levels. So from the high time frame you want to look for the most obvious key levels, and from this key level we can see a clear rejection. Price is rejected from that key level. All right, so from down here we notice another key level, and then we draw our line. Okay, so we notice that price rejected from this wick right there, as price tapped into our key levels and then rejected, went back. Okay, and then again from here we see that price actually broke the key level and then came back to retest, which acted as a support level. All right, and then we see another key level up there, and we can also mark it. And also we can notice that price rejected from this level and again rejected from there. All right, and when we look here at the bottom we could also draw another line here. This is another obvious key level, and we can clearly see that price also rejected from these two levels. All right, let us move on to daily time frame. This is a daily time frame, and we still have our key levels. So when we're looking at the chart we can see other levels, right? And we can simply just mark them with a different color so that we can differentiate between the key levels and other levels. All right, and from these levels we can see that price also rejected from here and also rejected at the top there, and again also acted as a support here, right? So this is on a daily time frame. So here is something that you need to take note of. So always draw your levels where you could get the most touches. So you need to get the most touches when you draw your levels. Okay, and then again, one of the most important thing to note is that you need to treat your levels as areas, not as solid lines. This is very important, guys. These are areas, not as solid lines, because price could easily just spike up or spike down with a long wick, and then from there just continue with the direction. Okay, so you wanna treat your levels as areas instead of solid lines. Okay, so now this is on a 4 hours time frame. We still have our key levels and the other levels. So this is the time frame where we're going to apply the smart money concept. Okay, so this is where we go into to find our market direction, to find the supply and demand areas, to find order blocks, our fair values, to identify liquidity zone, and to find trade opportunities. Guys, on a 4 hours time frame, we're going to apply the smart money concept. Okay, and from this chart, we can clearly see that price has been going to the upside. So price has been bullish. We can clearly see that price has been bullish, right? And we can clearly see that by higher highs and higher lows as a confirmation of a bullish trend. Okay, so this is a bullish trend. And let us move our focus at our highest high. Okay, so from that key level right there, we notice that price rejected from that level. And when price rejects from a higher level or from a key level, we could expect price to actually continue going down, right? This is what we could expect from this market because it rejected from a higher time frame key level. Okay, let us zoom in to get a better view of the market. All right, so this is still on a 4 hours time frame, and from here we notice that price actually created a fair value gap. So we notice a fair value gap, and then also we notice a change of character there, a change of character signaling that a long-term uptrend is coming to an end. This is a change of character or a market structure shift. The market was bullish. This is a sign that the market might be bearish from now on. Also, we notice that this movement has created an order block. This movement has created an order block. We also mark it. Okay. And from this order block, and looking at our current price, obviously we could expect price to actually push all the way to the upside, to tap into our order block, and then from there continue going to the downside. Okay. Or another scenario is that if price fails to reject from the order block, price could also break the order block and continue going to the upside. This is another possible scenario. So let us go on a 1 hour's time frame just to further analyze our market. We are still going to apply the smart money concept. Okay, we still want to identify the market direction, our supply and demand areas, the order blocks, our fair value gaps, to also identify the liquidity zone. And again, one of the most important thing is to identify trade opportunities. Identify when to enter the market. Okay, so this is on 1 hour's time frame. We still all right, so currently we know that the market is bullish. The market is bullish. Our current direction is uptrend. Okay, the market has been bullish, and from here we still have our change of character here and our order block, our 4 hours order block. Remember, on 4 hours we identified an order block, so this is the same order block on the 4 hours time frame. Okay, And when we're looking down here at the current price, we notice that the price is currently in a short-term bullish trend. The price is currently in a short-term bullish trend, right? It's going up. So let us zoom in on 15 minutes time frame. And from the 15 minutes time frame, we still have our change of characters. We still have the 4-hour order block. All right. And so on a 15 minutes time frame, guys, this is where we're going to be looking for confirmations and entry reasons. This is the time frame where we want to place our buys or our sells. So we want to identify our confirmations to enter the market. Okay. So from this, we're still expecting price to push all the way to the upside to tap into our order block, and from the order block we are expecting to sell the market. We expect market to be bearish to continue going to the downside. All right. So but for that to happen, for that to successfully happen, we want to see a change of character here, because this is a short-term uptrend, guys. This is a short-term uptrend, so we want to see a change of character there, and also a 5 minutes order block. If we could find a 5 minutes order block, then we know that when market goes back to tap into our 15 minutes time frame, we're then going to be expecting the sellers to step in. We're then going to be expecting the sellers to step in. All right. So this is the kind of confirmation that we're waiting for. So we're going to wait for a confirmation like this and then enter the market confidently, because this is the entry reason. This is our reason to enter the market, and therefore we're going to be selling the market, guys. This is a very simple strategy that beginners can easily follow. You analyze from the higher time frame to the lowest time frame. You draw your key levels, you draw your other levels, and then as you go down with the levels from 4 hours time frame, you then apply your smart money concept, looking for your supply and demand areas of your fair values, your order blocks, and then you go down to your 1 hour's time frame. You do the same thing. You do the same thing until you get to 5 minutes or 15 minutes time frame. That's when you're going to be looking for your entries. That's where you're going to be looking for your entries, guys. You have your overall direction from the higher time frame, and therefore you know that in a lower time frame, when you take your sells or your buys, you are confident with your direction, guys.